Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, April 8th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently starting with our market trend model. Again, this is just a overview of the tick, which is industry standard of buying versus selling. And then we add a time component to it to be able to view the overall trend of the market. Yesterday, we did continue to see some downward pressure via the bolded white CT here as we continued on the selling throughout the day. Up here, this is our institutional plus 1,000, minus 1,000 filtered tick. Basically, industry standard of looking at the larger buying versus selling orders. Again, we were below the zero line, indicating some larger institutional selling, not a significant amount as we've seen previous days when we were down below minus 60,000. Breadth indicator up here, new highs versus new lows. Again, new lows still outpacing new highs, indicating more stocks are being sold versus bought yesterday. We did see that little short-term bounce from 1 o'clock to about 3 o'clock that failed in the afternoon. So what we want to look for on this, if we want to see an overall turnaround in the market and a turning point, would be this bolded CT, which is our instantaneous intraday CT. This would need to start crossing above the shorter-term moving averages, indicating that buyers are trying to take control of the overall market and swamping some of the sellers. We also have this larger area here, which is our colored ribbon. The red continues to be in a negative slope below the cyan, indicating very long-term downtrend sellers versus buyers in the overall market. So what we have historically seen is back here on the second and third, we saw that short-term bounce into the colored ribbon. We did try to see buyers take control of the overall market, but then we came right into this ribbon and then failed pretty miserably and pretty quickly, and then we started another downtrend. So that's what we'll be looking for if we see a short-term bounce in instantaneous CT. Within this overall negative gamma put-dominated environment, high volatility, we can see very short-term quick bounces back to the upside, and these can be met with stalling and selling again and failures, and then we could return back to the downside, making new lows. That's not what we're saying is going to happen. This is not predictive. This is just telling us who is in control in the short term and longer term via this ribbon, and the short term via the bolded CT of the overall market. Are buyers or sellers in control? And we want to be on the right side of that if you're a short-term trader, also on the correct side of that if you're a swing to longer-term trader. So as of now, we continue with this downtrend within the overall CT. If we do see a short-term recovery, this could lead to some sort of short-term price appreciation bounce as we're seeing this morning, most likely bouncing or price bouncing into that 5,200 level. So we'll move on to the SPXA. This is again what we call the cruise ship. This is institutional money positioned for longer term, as you'll notice over here. This is monthly expiries. We are implied open at 5,200, gapping into a large in-the-money put-dominated level as denoted by this significant negative delta, indicating these are in-the-money puts overhead. We indicate that we are put-dominated within this overall structure also. Also, this 5,200 level is a very important level. We've denoted negative 6 million net delta. If you look over here, the call column versus the put OI column, this is almost double the puts versus the calls. So a significant level of negative net delta and put holders sitting at that 5,200 level. Again, these are not as liquid as the shorter term SPXPs with daily and weekly expiries. So that's why we like to look at this and see how institutions are positioned. So if we do get above 5,200, we could anticipate some price appreciation up towards 5,250. Again, noting that we're extreme in the money put dominated negative delta territory. So we'll have to have a significant change in the overall structure for a larger price appreciation. And then the next level above would be the 5,300, noting a significant amount of negative net delta, and put OI sitting at that level also. And these are in the money at the moment. So again, moneyness matters, as we discuss here at GammaEdge every day. Moving on to the SPXP, again, all expiries turned on, as you do noted by our purple tiles here. We are put dominated, drawing your attention to the expected move, 4.96%, which is still indicating extreme volatility. Again, implied open at 5,200. Again, on the all expiries for the shorter term, we have a large amount of negative net delta in the money puts sitting there at 5,200. Again, this may be a level that would be difficult to overcome. If we do overcome these, then obviously we have a decision for those put holders to make. These will be moving these 5,200s from out of the money to in the money and capturing some of that delta as spot price can move above this level. Again, if we're above this level, this can become some sort of supportive level as we move these in the money puts to an out of the money overall structure look. And then to the upside, 5250 would be that next level. We'd be looking for some sort of stalling or a price rejection, as that also is a larger negative net delta with the amount of puts sitting over here at 16,000. So we'll continue to monitor this, again, indicating that 5200 is a key sensitivity level to the upside. So we'll watch that throughout the day also. Moving on to the SPXP. Again, this is a shorter term expiry, 0 DTE, as we've denoted here. Expected move, we've already indicated that. This is indicating call domination from our close yesterday. You also notice that we are gapping very far away from the transition in areas we've denoted at the close yesterday. Implied open here at 5,200. Again, a larger area of higher sensitivity that we've denoted. Negative net delta. We do see call OI here. Obviously, this, if we would move above, would move this call OI to in the money instead of out of the money, and these puts would become out of the money also. With this resultant move above this 5,200, we could see some sort of dealer adjustments. Again, still denoting that we are gapping into a significant negative net delta in the money put dominated environment. So this will be difficult for price appreciation unless we see a significant closing of these in the money puts and a larger opening of out of the money calls to the upside, indicating that market participants are speculating to the upside. As we know, most market participants open out of the money calls, usually 20-30 delta for speculation. So again, we will continue to watch this overall structure. But again, this gap is gapping into a significant in the money put dominated environment. Which may put a dampening on price appreciation to the upside, at least on the short term. Moving on to the delta balance history. Basically, this is just indicating what is happening above and below spot price with market participants and in the money calls versus out of the money puts, as well as out of the money calls versus in the money puts. Drawing your attention to this left-hand plane line here, we've denoted that the left-hand plane line is improving. This would indicate that most likely in the money, out of the money puts below us have been closing, and this exposed some in the money calls in that left-hand plane, which is below spot price. So you get a subsequent rise in this overall red line here for the left-hand plane. Now, on out in time, this is our projection, really not a significant improvement. So this would just indicate short-term closing of puts without the resultant out of the money call speculation or opening of out of the money calls above spot price, also indicated via this right-hand plane here. So we did have a short-term price improvement here, still not above the zero line, which we like to see, indicating that a significant amount of out-of-the-money calls are coming into the overall structure. So just a short blip now, indicating that we most likely had some in-money puts closing above spot price without the resultant confluence of in-the-money calls, out-of-the-money calls opening above spot price. So we'll continue to watch this. The takeaway should be that the blue delta balance line is still below zero, indicating that we're still in a highly put-dominated overall environment and call speculators are not able to take control. If we do see some sort of control shift or change, we would see this delta balance line start shifting above zero, indicating that both planes above and below spot price are shifting from a put speculated environment to a call dominated environment. All right, moving on to the delta balance history. We already covered that. We forced spot price at our projected open at 5,200. So that was just a zoomed in of the delta balance history via our hyperlinks. So it's just nice to take a zoomed in look and then step back and take an overall look to see how the structure is improving or not improving. This is our EM chart intraday. We like to look at this for 0 DT traders for the highest sensitivity levels. Again, we forced spot price at a implied projected open around 5,200, indicating this 5,200 will be extremely highly sensitive area as we come into the open, and then our resultant areas of 0gex and p-trans also. The spot price could just definitely oscillate above and below these levels at the open as we let the book clear. And we do see some emotional trading probably at the open via closing of puts or closing of calls or opening of calls, or just continuing to let the book clear around that early opening price, wherever that implied open will be. But just indicating 5,200 will be a highly sensitive level at the open. This could also result in some sort of rejection, or also if we get above, this also could be some sort of supportive type area, depending on if we are moving that structure in the money or out of the money. So we'll continue to watch that at the open. Moving on to the net stack command. This is basically just also indicating where the highest sensitivity levels will be at the open, with a projected spot price around 5,200. So left-hand plane, we do see in the money calls below spot price, as indicated by our web app that was call dominated, but that left-hand plane strike, it will be well below the projected open. So we'll continue to watch that. To the upside, we do have a significant amount of in-the-money puts at 5,300. That would be the highest sensitivity level to the upside if we did reach that. Obviously, that's 100 points above where our projected open is, but also noting where the charm is at, 5,225 for those out-of-the-money calls. Again, if you understand charm or looked at anything over the weekend that we posted with our newsletter, this will continue to be a headwind as these are out of the money. And if they do not become in the money, this right-hand plane integral can be a headwind or ceiling, as well as a resultant to the downside. If spot price continues to oscillate sideways, these in-the-money calls can become supportive. So just denoting again these highest sensitivity levels to the downside and to the upside, and we'll be watching those intently with how spot price reacts, and if we do see any resultant change in these sensitivity levels throughout the day. So moving on to the projected open, obviously we've crossed 5,200 now early on here. Sorry about that. Move on to this chart for the projected open. So we're watching that intently. If we stay above that price, this 5,200 can become a supportive level. If we do drop below that, that 5,200 can become a resistance level. We'll be watching the previous day high and that 5,225 overhead that we discussed on the charm level. And then again, to the upside, 5,300 would be that next larger area of in-the-money puts overhead that we will continue to watch. So hopefully that helps. Again, takeaway for today is we're gapping into an extremely in-the-money put-dominated environment overhead. We are anticipating, again, increased volatility. The MTM has not really improved significantly, so we'll continue to watch that to see if buyers try to take control over the sellers. Basically, a takeaway for today would be less is more, smaller size, shorter dated time frame. If you're also looking to trade, again, highly volatile, so sitting in cash is definitely a good position, and just observe and wait for the structure to repair so we can wait for our fat pitch or our edge to give us a higher probability trade. So with that, I'll leave everybody. Everybody make it a great day, and we'll be in the Discord in just a few minutes. Thanks.